I think in 2023, banks are really discounted and offer a really attractive upside proposition to an investor. And the reason for it is early in 2023, we had the big bank scare. We had Silicon Valley Bank go bankrupt, and all of a sudden, all banks were I guess, considered high risk that they were going to go bankrupt. People were going to lose their money, and shareholders really sold off banks. Now, I think it was overdone. I think there's a lot of quality banks that are going to be around. Banks are needed for the economy, so the government isn't going to let banks just, disappear because that would just, really destroy the economy. And I found a bank that I think is really interesting, U.S. Bank. It's actually the bank that I now use. I was a Union Bank holder, and Union Bank was acquired by U.S. Bank. So far so good as a customer. But I looked at their financials and thought, man, this is an interesting bank. So I wanted to make a video on it. My name is Victor. I have an MBA, and I do analysis on companies that I consider investing in. And I'm going to get into some analysis here on U.S. Bank. Before I do so, do me a big favor and like my video and subscribe to my channel. That'd really help me out. Now let's get into looking at U.S. Bank. So I've developed the process looking at a bank and determining if I want to be an investor. It involves four questions followed by the decision to buy, hold, or sell. First, do I want to own this bank? Do I want to be part of the banking industry? Is the bank operated well? Is the bank book value growing? And I want to discount the stock so I could see my investment go up in value. Based on the answers to those questions, I buy, hold, or sell. Story on US Bank is pretty predictable. They're a very well-run bank. They're growing. They're now growing through acquisition. And it's a really good year to be acquiring banks because they're discounted. So I like that they're growing. Their bank is very well capitalized, and their top line's growing really well. The story on the bank's pretty simple. They're a mid-sized bank, which is attractive to me. I think the big giant banks, they have a very hard time growing, and in some cases, you see their revenues go down. But this bank here, I've seen their revenues go up. It's very well operated. I like the story behind them, and I like the bank, and I like the industry. Looking at their annual report, it shows that the bank has been nicely growing. They grew from 2021 to 2022, a little over $1 billion in overall revenue, and they are profitable. Their dividends have been growing, which is good to see. And their book value, though, has been dropping a bit. So I got to take a look at that closer. And I'm going to look at their most recent quarter close. This is for the annual year ended December 31st, 2022. And the other nice thing that they did last year was they bought back shares. So they took some shares off the street. That was very good. Now looking at their more recent quarter, it looks good. They're growing really well. And I think the acquisition of Union Bank is taking place here, and they're very profitable, very good. And their book value is growing in the current quarter. So that's very good to see. They did have to issue out some shares to cover, I believe, that acquisition of Union Bank. Now let's take a look at where the bank has traded in the past and where I think the opportunity lies in this bank as well as other banks. So first, the stock price, we can follow that along, and it's kind of went up and more recently went down. Again, the big scare around banks in 2023, their book value has gone up consistently. It had a dip here in 2020 with COVID and so forth. They had a dip. But you look at their price to book, and this is a very important ratio for banks. They have historically stayed at, above 1.2, and in probably the good economic times, they were up around 1.4 price to book. And really, as recent as the beginning of 2022, their price to book was 1.4. But with the big scare, it dropped price to book. And the thing I'll point out is US Bank didn't change in 2023. It's the same bank. They're still growing. They acquired Union Bank, very good acquisition. Silicon Valley Bank had a set of circumstances that they're just lethal. They, and I'm not going to get too far into that, but the other banks didn't have the same recipe for disaster that Silicon Valley Bank had. So I think this is the clear visual that this bank is undervalued. It should come back up to at least 1.2 price to book. And once we get into a growing economy, it'll climb back up to 1.4 price to book. I believe that US Bank is currently discounted by 45%. I think that each share is really worth $52.20, but the stock market will sell you shares at $36.11 all day long. I get to my valuation by taking the book value and where I expect that book value to go in the future. I also look at their earnings and again, where they're going to go in the future and try to get a valuation and a net present value of those. I also use the earnings per share value method. That's the grams earnings per share valuation method. And I get to my number, which is $52 per share, offering a 45% discount on US Bank. So let me scorecard US Bank. Do I want to be part owner in this bank and the industry? Yes. I think it's the right time to buy banks right now. It's before they start rising. And I think this bank is very well operated. I like their growth strategy. They've been growing really well. Their book value is now growing, as I showed in Q2, and there's a pretty good discount available, and they pay a nice dividend. So I'm going to be buying shares of US Bank. Over the last year, the stock was trading way up here at around $45 per share. But once we got into 2023 and all the fear got into the market, it started discounting these stocks, tremendously. Again, what I would point out is US Bank, from an operation profitability standpoint, balance sheet standpoint, they are the same bank here that they are here. So fundamentally, the bank didn't change, but their stock price got discounted tremendously. You saw a good rise here in the summertime, and then we've seen a recent pullback. So it offers a really nice discount. I think there's value in this stock. I'm going to be buying shares and be paid that 5.32% dividend while I wait for that stock to rise. And again, due to the fear in the market for banks, the stock has been discounted heavily, and year to date, it's down 19%. So to summarize, I'm always looking for quality banks, quality companies that are discounted. And here's a really good candidate. I like what I'm seeing in US Bank. I don't own any shares just yet, but I'm going to be buying into US Bank and then building a position. Overall, I'm bullish, optimistic on the financial sector. And the reason for it is that I think it's been punished. It's been discounted. There's been a lot of fear, and it's not driven by fundamentals. So whenever that happens, there's an opportunity to buy stocks at a discount. I hope you enjoyed the video and found it interesting. I'd love to hear your comments on US Bank, what you think of US Bank. And I'd really appreciate if you could like my video and subscribe to my channel as well. Thanks again for watching, and good luck investing in 2023.